What's going on, guys? Just because we've gotten a lot of demand for some more crypto, I thought I would just do some crypto that was trending. So we're going to talk about Dogecoin. And before we get started, I want you guys to do one thing, and that's just like this idea. Not only does it support us, but it gives others an opportunity to view this content, scrape away some money if they're following our trades, and at the very minimum, learn how to read the charts. So that being said, let's get straight into this madness. And historically speaking, whenever we get a a line, the more vertical the line, the more likely it is for us to break it. So let's, for example, if we have a trend line, if we have a horizontal support, it's support or resistance, it's gonna likely have some more difficulty breaking through. We might see something like this, and then we might see something like this, and we break out and turn support. Um, Similarly, with trend lines, we might have something like this. Um, you know, start up here, come down, go up, come down, go up, test this trend line, come down, test the trend line right away, come down, down, test it again, and then eventually we might break through, and then we might turn it into support, and then we might come up. So the thing is whenever this trend line gets more and more vertical, there's a higher and higher probability that that trend line is going to break. So in this instance, this trend line is extremely vertical, as you can see here. Um, so we have nowhere else for it to go but right. So it has to break, and the only way it could go is up or down. But from what we know historically, uh, these trend lines, when we get major moves like this up or down, we're going to usually see a big correction. So let's go to the line charts like always, and well, it might be a little bit different because the closing prices are way down here. So we might actually just stick with candles for now. And what we're going to do is actually go to the weekly. I usually like to do monthly, but we don't have that much data on this chart right here. So it's going to be a little bit easier for us to go to the monthly or weekly, excuse me. And what we want to do is come up here and say that we already hit our 38% retracement, which is our minimum. That's what we want to look for whenever we're looking for some sort of retracements before we actually go in for another buy opportunity. Now, it is possible for things to continue up without some retracements, but it's more probable for us to see some healthy pullbacks before we actually get any type of momentum going upward. Um, so we're not saying short it, but we are saying there's an opportunity potentially for us to have a better price point down here. However, if you're looking at this strictly as an investment, what the fuck? That is weird. Where's our stop loss? Why is it way down here? I think we're having errors, technical difficulty problems. Ah, that's better. What? I don't know why we're having those problems, guys. I'm sorry. Basically, what we're looking for is something like this. We can see some sort of retracement, a healthy retracement. Remember, guys, retracements are normal. And what we're trying to see is just an increase in price. So we might see a retracement like this just because this is a critical area of structure, but it doesn't necessarily mean that we're going to be seeing that either. So we could see some sort of pivot point earlier up here. So for example, this is a little bit closer towards our 88%, and that might be a little bit more feasible, guys. So it doesn't necessarily mean that we need to be exactly at this area of structure. We could do something like this as well. So we'll mark this one up real quick. It's just going to be the 78%. I think that was the 88%. 88% fib and pre all-time high. And then the next one is just going to be, it's just structure. These are going to be two entry points. So you could have two entry points as limits. But if you guys are investing in this for the long term, however, the fundamentals on this are not that great. So Dogecoin was more of a parody slash meme coin. It was just showing the ability to create fictitious value using the hype of cryptos. So the fundamentals behind it are not that great. It's not that best of a business model. But technically speaking, and because of the hype behind it, it doesn't necessarily matter because a lot of trading is, um, you know, retail trader psychology and general consensus. So if the consensus agrees that it's going to go up, well, guess what? It's going to go up. And so if you're taking this as an investment, you're not asking you to short this. You could do dollar cost average. So continue to buy up here every single month, and if it comes down, then you're just buying at a better point. And if it goes up, you're still buying it because you're thinking there's going to be an extended value in the future. So take that in consideration, guys. This was just a fun coin to review because, like I said, there's a lot of hype behind the cryptos right now, again, which is great. And then there's also people who are asking us to do some cryptos that were in the public eye at the moment. So take into consideration if Elon Musk is posting about it, even though he said in an interview that it was a meme coin, it's likely to rally, and that's exactly what happened right here. He posted it, and we got a nice little rally. So, anyways, this is Dogecoin, guys, and I'll see you guys in the next video. Bye.